Hey everybody, and welcome along to today's Trader Cafe. Normally, where Julian comes in and asks a few questions of our senior traders. I'm just going to send a message here to see where a couple of people are. Lincoln, how you doing? You're a guest for Trader Cafe today. It's good to have you along. What can you tell us about yourself? Where are you? What kind of trader are you? What can you tell us a little bit about your history?
So I'm from Sydney, Australia, coming to you straight after my dinner now. So the trader, I'm a trend trading trader, mainly on the 4-hour charts, sometimes on daily. And yeah, I just did a workshop last weekend, which was great. And
Yeah, how'd that go?
Yeah, it went really well. A really engaging crowd, a lot of questions, and I hope I was able to help a few people move forward. Maybe look at a different strategy, think about the different aspects of trading, because everyone's at a different spot in their trading.
That is
So,
so true,
you
isn't
know,
it?
it's more if people ask questions, they get the most benefit.
Um, yeah, look, I think that's so true. If it would be so simple if we could just teach everyone the same thing and everyone would get the same result, but everybody does seem to need something different and some kind of other return. Um, look, we did a show last week. You're doing a couple of shows on YouTube for us where you're talking about 4-hour and daily entries. I think we had 11,000 people link into one of those on Facebook this week and have a look at your show. Not bad, is it? 11,000 people. What's
That's a
on your
lot.
shows and what kind of stuff do you include in there?
So during the Wednesday show, I cover 10 different currency pairs on the 4-hour time frame as the entry. And so I show how I look at the direction, find the direction, and then I just take trades live if there is anything to trade. Yes, and then just go through, analyze all the charts and see which way I'm trading, whether long or short, and what type of entry areas I'm looking at. And then if there is a setup, I take the trades live at the show. Yeah.
It's amazing trading, isn't it? It's so much about the technology, and traders are so good at the technology they need to trade. But Julian will be with us in a few minutes because the PC at home's crashed. We can't get in.
Oh,
so he's not
okay.
far away from coming in to interview you. He does apologise. He is on his way. If you're in the show, do hang with us, and we'll have Julian here to properly interview Linka. But in the meantime, Linka, I'm going to ask you some tough questions because I love asking people tough questions.
Okay.
If you had one piece of genetic advice to help traders become better, what would it be?
One piece. Ooh, that's really tough.
Yeah, I love it. Eh?
Yeah.
Here to make friends. We're here to help these people out. What's the
Look, I think what I found last weekend, it's, people have different strategies. They work on different things. But for me, what I sort of realized, and I try to explain to people, it's not about the individual trades. A strategy works on a probability over a certain time or number of trades. So if you're going to give something a go, it needs to be consistently. You need to follow that strategy, take every trade, and follow the strategy for a certain amount of time to see the results. Because if you just take 1 or 2 trades and then you skip some and then you take another couple of trades, it's not really looking at, it's not giving you the results that the strategy is designed to do, because the strategy is based on probability over a long time. And so just taking 1 or 2 trades and go, oh, well, this strategy is not working or working, it's not really how it works.
Yeah, I think it's a great thing. Like, we get a lot of people sometimes tell us, look, we've traded your strategy for a month and it doesn't work. And we're like, actually, if you want to be a professional trader, you're probably going to have to do more than a month. And every strategy works at different times and doesn't work. Honestly, if you've traded a trend trading strategy in the last, say, 3 weeks and you've made $1, that's a dog of a trend trading strategy. Because it's not going to work when markets really trend, right? It's been an awful 3 weeks. And trend trading strategies have had to control their risk and pull back and get it all working properly. just a bit blurry, Julian. We've got you as unmuted. We can see you, but you're a bit. It's like you've got a fuzzy background on yourself.
Um, yeah, hopefully that'll clear itself up. I think once the computer learns where I am,
Actually, we've got a reflection of you in the back as well, so we can see you. We can see a reflection of you in the background. It's like you're on some kind of mirror setting.
Yeah, I've. Okay, let me just try something else here. Sorry, guys, I'm having to do this. I'm a bit on the run. I apologise. A few tech issues today. My computer just blew up on me.
It's better, mate. There we go. There you are. Well worth the effort, eh? There you are. Mate, it's my one of my kids' birthday yesterday and the other one today, and we've had a party for them today. And I promised them both that I was going to put them to bed tonight. So if you're okay and you're back,
I'm
okay.
Going
to off the hook because I've been asking mean questions. I'm going to let Linka off the hook. I'm going to send it back to you, and I'll see you in the Sunday market update in about an hour from now. Eh?
Cool. Thanks, Paul.
Cheers, mate.
Thanks, Paul. Bye.
Thanks, Linka.
So, hi everybody, and apologies for the late start. Hassel and Lenka, welcome to you. It's been a bit of a 5 minutes here as I'm trying to use my backup PC because my main one has decided it doesn't like me anymore. So bit of a panic over here.
Glad to have you online.
Great. Hey, look, I don't know what where Paul's got to. You guys have been going for 4 or 5 minutes now, so hopefully you haven't covered too much stuff, the things we were going to talk about, but I'm sure there's plenty we're going to fill the next 40 minutes with. So, I don't know if Paul's done this, but everybody, if you're out there, welcome. And what we're going to do, I'm sure you guys know the format for this, right? So our guest this week is Lenka Taylor. And so Lenka's from one of my favorite cities in the world. That's it. Drop dead gorgeous place. Sydney, for those of you that don't or haven't had the opportunity to go to Sydney, then my advice is just go. It's amazing. And there's so much to do there. Amazing culture, brilliant place. Like I say, one of my favorite places, almost as good as Auckland. Almost. Really close second.
Auckland's great.
So yeah, look, I think maybe you just help me out a little bit here. If I guess you and Paul have been talking just generally. So why don't we kick off? And if we've covered some of the questions, and let's just see how we get on, and just say, hey, look, we've done that already. Right. So I guess the obvious questions we always do with this situation is to ask you sort of how you got started and what the your particular trading journey is, and what was how long have you been going for?
All right. So I got started a little bit by accident in a way. I just went with some friends to a business seminar. And my friends were already in a small business, and we thought, we're going to go and see Richard Branson in Sydney, right? He was at one of these events that has multiple speakers. And one of the speakers on the day was a trader from London who had obviously a very good pitch that worked well on me. And I thought, this is brilliant. This is interesting. I was looking at setting myself some, bigger goal, something to stretch myself. Mm-hmm. And I thought, awesome. So I went and signed up for a course and I started trading. And so that was back in 2015. So I've been trading ever since. I haven't stopped except for holidays. So yeah, been trading non-stop. And I used to trade. Well, I took it very seriously. At the beginning, I took it as a job, like 9 to 5. I was like trading, over trading, not knowing what I was doing. But I learned along the way, which was the most valuable lesson when you learn from your own mistakes and you just keep going.
Look, I think that's one of the key things about this, right? And I think did I hear the word, the persistence word in there? And or if I didn't, I have that feeling. And I think one of the great challenges that every trader has to overcome is the fact that, I think in a lot of professions you get paid to be right almost constantly and not make many mistakes. But trading's a bit weird that way, isn't it? You can make mistakes and still be successful. It's about making fewer than the successes, right? And I think a lot of people struggle with that concept initially, and I think they sort of go, "Oh, okay, well, I don't understand why I don't seem to be very good at this." Well, you know, it takes time. You know, you've got to learn a brand new skill set, and more importantly, you've got to learn something whereby probabilities are more important than getting everything right all the time. And so getting it right helps, don't get me wrong, but
Yeah.
but
No, I
sometimes
agree.
from time to time the market just will not let us. So you know, you just have to grin and bear it. So I think one of the really interesting things about this you know, I'd like to hear a little bit more about how you move from that trading into coaching traders, because you picked that up quite early on, didn't you?
Yeah, I guess once I got my strategy and I was, I mean, I had a lot of coaching at the beginning, developed my own strategy, and then I was getting good results. And a lot of my friends, it all starts with the family and friends. They ask you, how is this working? What's this trading about? And so when I was explaining things, I really enjoyed it. And I used to do coaching and that kind of running workshops for people before. So it was, a good fit. And then when my youngest daughter was going to high school, I thought, well, I wanted to do something a little bit outside the house because all my other friends were going back to work. It was just me and the computer most of the time in the house, still didn't have an office, didn't have office parties, didn't have Christmas parties. So I thought I need to do something outside the house. And at that time was sort of brainstorming different ideas, looking at what are the opportunities, what could I do. And I'm one of those people, I don't like to work very hard in terms of labor, sort of intensive. So I was looking for something that would work in that respect, and also something that would work still around the time frame with the kids. I like to have the holidays off and be flexible, be able to be there for the kids. So it was actually my husband who suggested to do some coaching or running workshops or
Mm.
trading. So yeah, I tried that and I got my first client, someone that I knew, and they were quite interested, and then just developed my program from then, and then started teaching, more people, groups of people. And yeah, I enjoy it. I love it.
So talk me through then the priority when you talk about coaching. What do you think is the most, the two or three most important things that people should learn?
The three most important things. Okay. I guess, first of all, I always feel like people really need to know themselves and what they
Mm.
actually want, what the goals are. Because sometimes I talk to people and they have a goal, but as soon as they reach it, they're on to the next thing. So it's like, is it if the goal is to beat the banks, some people have money in the banks, but they're not happy with the return, or they want to make a little bit of income, or they want to make part-time income, or they want to make full-time income. So you have to sort of have a goal at the beginning, because every strategy is not going to work for whatever goal that is. So I usually try and talk to people and find out where they're at and whether my strategy is going to help them. The other thing people need to understand and also be very, very honest about their own risk tolerance, because there's
Yeah.
no point teaching someone who has absolutely no risk tolerance and they're actually quite happy to leave their money in the bank because that's safe and they can sleep at night, right? So there needs to be some level of risk tolerance. And the more honest people are about that, the easier it is to actually find a strategy that's going to fit. My risk strategy is quite tight. So it works for people that do want to have, take sort of minimal risk. But some people, that's just not what they want. They want more risk, more profit. And that strategy would be very frustrating. So it's really important to find out those things. And then I guess, trading works for someone that, in my opinion, is a visual learner. they like to see things and they learn from that, because looking at charts, it's a very, very visual sort of activity. You need to look at the charts and you need to sort of learn to understand how the charts move and how it correlates between different time frames or with different indicators. And so if someone is already suited to that kind of learning, then that's really good. They'll probably be a fast learner. And following a strategy, because if you can't follow a strategy, then you really can't get the results. I was telling Paul at the beginning, you know, he was asking me about what's important. It's sort of, you can't just try something for you know, one or two things and then expect to get results. It's like if you're learning to surf and you catch your first couple of waves and they're bad, you know, you get dumped. You know, you end up on the beach with sand up the bum and you're like, this is not fun. This is not what I wanted.
You do not want to watch me surfing.
Yeah. But it's a little bit like, you know, the expectation needs to be that there's a learning curve and also that consistency. You need to be practicing all the time. You can't learn it from books. You know, so many people say, oh, I need to read this book and watch this YouTube video. If you're not going to actually do it, you're not really going to learn. You need to do, and then you need to ask questions, you know, have a coach or a mentor, ask questions so you can move forward faster. Did that answer your question? I'm not sure. I think I just went.
Totally. No, so I think what you've been saying is really important, right? And you know, I encourage everybody out there, you know, you guys have heard me, if you've listened to any of the previous episodes, you know, you've heard me talk about this before, but I don't you know, apologize for continuing to say this. You know, you've really got to have a sense of what you're trying to achieve. You know, you've really articulated that well, Lincoln, and I think within that sense, you know, where it gets hard, I think, is when a beginning trader sits down and said, okay, what are we trying to achieve here? Well, I don't know. You know, I don't know, somewhere between I want to make $5,000, I want to make $5 million. I don't know. You know, so I think where that element of risk tolerance and that element of the of what you're capable of really becomes important, right? You know, people are if you're doing this full time and you've managed to give yourself a bit of airspace and, you know, bandwidth to be able to manage this, and that's awesome. And I think being able to, if you like, to come into this new and do it full time is absolutely fantastic. But for the vast majority of people, that isn't the case. The vast majority of people, they're trying to pick it up while they're doing a day job. And in a sense, if you like, it's part of a new education program for them. They're learning a new skill, which means you're doing it outside of office hours, which means you've really got to be committed to a strategy. And that's why I think having a series of goals is really important. You know, I remember the old saying is like, if you you know, if you move from day to day, you can't really see any significant change. But if you look back over 6 months or possibly even over 3 months when you're getting started, you can see a tremendous difference in the you then to the you now. And I think it's really important for people to figure out what that's looking like, and more importantly, while you're doing the journey, you know, review it and morph along the way. You know, you've got to be flexible and say, well, this is my strategy is almost like a living strategy, right? You know, I'm doing really well over here, but I've got another you know, something else that I know I've got to learn about, but it's over here, and I don't know, you know, I don't really fancy that because it's either too maths based or I just don't like the look of it, and so I'll think, you know, I'll park that. But in trading, it's really hard to do that because you've got to collect the whole, right? You've got to know what's going on amongst the risk management ideas, amongst the strategy ideas around which markets are the cool places to be right now. So which are trending for your strategy, not to say trending, but which are working for your strategy. And so I think there's actually quite a lot to it, you know, for many, once you get into the nitty gritty, but you've still got to start somewhere, right? And no matter how you do this, you absolutely have to have an idea of what you're trying to achieve over 6 or over 12 months. You need to put yourself under a little bit of pressure. And I'm really a big fan of that, and say, okay, look, you know, my goal is to do X, Y, and Z. And, you know, I try and start the year with a sense of that as well too, every year in my mind. And, you know, hopefully I get there quite a few years. Some years it doesn't work out, but you know, the point about all of this is that, you know, the only way that you're going to get better is to make mistakes and make fewer of them as you go forward, right? I know it sounds a bit harsh, but, you know, making mistakes is sort of a little bit of life. And in trading, there's quite a few. You know, you're going up against good people, and you've got to understand that that they're a little bit different to your trading journey, right?
Yeah.
So, so when you're, you know, if you sort of tried to summarize it, then if you were like, so for the, you know, for your students, you're saying, look, hey, you know, I want you to develop an edge. What would be, how would you go about trying to get them to do that?
So if they were to develop their own strategy, I would probably use the same as what I used. After having some, you know, base, you can just pick up a strategy from anywhere, really. Perhaps look at all the good trades. That's what I did. So I looked at, okay, if I take, say, 30 trades, what are all the good ones? And then
Yep.
what is the difference between them and the trades that did badly? You know, Hitler stop loss. So, and then see what can I see on the chart that would distinguish those trades. And then once I see something, it could be an indicator, it could be a price action, could be whatever it is. But if I then go, okay, so my theory is that if I take the trades with this type of, you know, arrangement or conditions or whatever it is, then I document that. That's my new rule. And then I would go and backtest. So I would go, okay, so if I now use this type of entry criteria, I guess, or this type of trading rule, would it work? And then, you know, go over a couple of years, you know, certain currency pair, and is that going to work? And if it does improve the strategy, then keep that rule. And if it doesn't, well, you know, you might have to look for something else. And there's always an opportunity to review the rule and improve it and get that edge a little bit better. So yeah, I usually, that's what I do. Look at the good trades and say, what is the difference? What was, yeah.
Do you think that that's something that traders are keen on, or do you think that traders are more keen when they get started on just making a trade? And this sort of gets back to the how do you coach them through the difference of that?
So in my own coaching, I usually teach them a strategy to start with, so they can get started really quickly. They can take trades and they can learn a strategy that works. And then they can develop it or tweak it to their own personality. So for example, I used to trade on a daily chart as an entry point. But then I found a lot of students were not patient enough to wait for those types of trade setups. So I adopted my strategy for the 4-hourly time frame, right? But then I did have a person who, for example, they had like 2 months of work and they said, I want to try something where I can trade, like, you know, more often. So we looked at the strategy and developed it for the 15-minute chart, because that person had the time and you know, was able to spend more time in front of the charts to trade. So that way they spent more time, but they also got better results. And that's like one of the things, because I don't work that many hours. So I only probably, in terms of trading, would trade around 5 hours a week. So for me, that's what I want. And it's, or, you know, that's enough for me. And whatever result I get with the strategy, that's all right. But for some people, if they have more time, they can put the extra hours in, use a different strategy that's a little bit more faster. And also they can adjust their risk. Obviously, everyone's going to be different with the risk, so they can get different results. But I think it's a good idea for people to start with a strategy that works. And then if they want to develop their own, then learn how to develop their own or tweak the existing one to something that suits them better.
Hey, I completely agree with that, and I've traded all sorts of different time frames in my career as well. I remember I would when I was trading full time, I would trade non-farm payrolls. These were a few of the days before the algorithms really took control. I would trade non-farm payrolls on a 1 minute or a tick chart, um, and it was quite interesting. So once you've looked at the option volatilities, you can sort of figure out where the market's going to get to if it has a neutral number, and so the sideways range, and you can consequently trade that range. And there's but trading a even trading a 15-minute chart in that environment wasn't worth it, because you didn't get the right signals. So there's but equally, these days my methodology is something that I use on daily and weekly charts, and occasionally for hourly for entry. But I don't normally tend to ever go lower than that. I think it would have to be pretty extraordinary. Sometimes, look, it's dictated by the volatility for me. But I think also you've really nailed this, right? Is that this is about people's energy as well. There's this whole thing about the patient stuff keeps coming back to me in my mind. There are times when the market's not giving you money, right? There are just times when that's going to happen, right? Your strategy will be out of favor for the market conditions. Hopefully you're scanning enough markets every week that you can maybe try and maintain it for as long as you can. But it's like at the moment, I think there's a definite sense in the foreign exchange market right now that, number one, trends aren't happening. Gosh, we saw that Thursday, maybe the beginning of a breakout for the US dollar, quickly reversed again. I wonder if we're going to follow through the other way. Well, that's going to be quite exciting for next week. It'll be the subject of my topic talk in the TTL radio today. But the key thing for me is that having the patience to wait through this until you get the signals is really important. I think if you've got the time to be able to trade shorter term, knock yourself out, right? And actually some people like that. Let's I don't want to generalize, but maybe if you have a slightly more highly strung personality, for you shorter term trading might be the right space that you want to live in, right? But if you're an incredibly laid back person, it may be something we say, no, I'm happy to do dailies, weeklies. The risk isn't so important to me, but I want to give all my trades room. I'll still look for asymmetrical trades, but I want to give my trades a little bit of room to breathe, because I'm not comfortable trying to trade too short term. So I think it's a really important thing, and we keep going back to this, and you mentioned this 2 or 3 times now, that you've got to find what works, right? Find what works for you. I've always joked that I can give 5 people the same strategy with the same risk parameters, and I'll get 5 different sets of results. And that's because people, not because they go away and they tweak it, but because people have different personality styles, right? And so actually, we'll come back to the questions in a second. You also mentioned risk as well too. So talk to me about how you conceptualize risks for your students as well.
Okay, so initially I like to measure risk in dollars, because usually people can relate to a dollar value as opposed to a percentage. Percentage can be a little bit confusing, or masks the real risk. So I do a lot of work and exercises in terms of the actual dollar risk, and then I do, and it's called like an experientialistic exercise, where people look into themselves and they try to identify what their real actual risk tolerance is. Because sometimes when you ask the person about risk, they'll just give you a number that feels all right. But when you actually, delve deeper, they may or may not be comfortable with that same number. So so that being really important. And then once we have a risk, obviously starting, if it's a new trader, starting with a demo account, and then seeing how they feel every time they take the trade. If they can easily take a trade, then the risk is fine. If even on a demo account they feel physically sick taking a trade, then it's probably not the right risk, right?
I think that's a really good way of describing it, actually, folks. I hope you're all listening to this one. Much as I hate demo accounts, Lenka has a point on this one when it comes to thinking about risk and what you're prepared. And actually, I think that people's risk tolerance changes as well too, right? You know, depending on the not necessarily depending on market conditions, but depending on how they feel. I have a little story on this, if you'll allow me. But I once worked at a place where they would ask the traders to rate themselves every day when they came to the office. So you walk into the office and they'd say, right, what's your number today? And they say, oh look, I'm a 7, right? And it's obviously out of 10, right? And they go, okay, fine. And so you put your number on the board, right? And everybody put the number board. But say you'd be like being out on the beers the night before, right? You come in, you're still a bit hungover, you're not really with it, the market's not helping you, you put you down at a 3. Okay, and what was really interesting about that is when the traders that were 8 and above, the company would take their trades. That was how they viewed it, right? They look at it and go, right, if you have a positive attitude to this, we're going to, and you're rocking and rolling right now, then we're going to put more leverage onto your trades. You might not do it, but we'll do it as part of our back book, if you like, trading book, because they felt that traders who were in a really good state of mind often were trading well, and their trades should be respected, right? So it was a really interesting approach, actually, and it seemed to outperform a little bit, but then the bosses changed and that all went out the window. People had a slightly different view about how the world should work. But I thought for that time it was quite an interesting idea. And actually this really feeds into this whole risk discussion, doesn't it? Because risk morphs. It doesn't, you know, I absolutely agree with your point. People say they're willing to tolerate a 20% drawdown. That's complete rubbish. I've always in my head halved it. They're probably only willing to tolerate a 10 and vice versa, right? You know, and you know, do you risk 1% on a trade, or do you put a half on, or do you put 2% on? Well, this really is determined sometimes simply by the way that you got out of bed the morning before, right? So it's a really interesting moving target. And I guess this feeds back into this whole strategy thing, right? About what you're trying to achieve.
Yeah, that's right. And sometimes, you know, if you have a couple of losses, your risk tolerance is going to be a lot lower than if the previous 3 trades were winners, right? So it's sort of like if you're making profit, you feel like your risk tolerance is more, when, you know, in fact, it should always be the same. So it's one of those things, tweaking the risk. I found it didn't quite work for me, because if I tried to predict if a trade was going to be good or not and place the risk based on how I felt, it didn't work. So then I changed, and it's always the same risk on any trade, because I don't know which one's going to be good or not. I always say I'm not a clairvoyant. I just know my strategy works over time, right?
Nobody's a clairvoyant, trust me. It's you just hope that you've got it right. But yes, 100% agree with that.
Yeah. And then maybe putting taking risk differently the closer you are to a certain, you know, like a horizontal resistance or something like that. Then that makes sense and works quite well. But doing it on how you feel, I don't think that's probably, well, it certainly doesn't work for me. So I don't recommend it.
And what do you think about the asymmetry when it comes to the risk? Are you looking when you're coaching people, you're looking to teach them about, look, you know, you want to risk 1%, we want to try and make 3% here, so 1, 2, 3 times, always thinking about what sort of asymmetry we should look for. Do you think that sort of morphs itself from the strategy and the market conditions at the time?
So initially, I find the person, like if they're trading a demo account, then they just trade the strategy, which is up to 1% per trade. If they're trading their own money, then it depends on what their risk tolerance is. My strategy would be going, okay, I always want to be looking for at least 1 to 2 risk to reward ratio. So if you're brand new, just do that. So your profit target is at risk to reward 1 to 2, because mathematically, you know, that outperforms. If you can still have many more losses. When you're a beginner, you might have a lot more losses than profits, right? So it still works, and you can still have a strategy that works well for you. And then as they progress, then we look at the different strategies like trailing the stop loss, changing the profits to just keep going, and then having a trailing stop exit.
Cool. Yeah. Look, I think that makes tremendous sense. So did you have a mentor, and do you think that a trader should have a mentor?
Yeah, so I definitely had a mentor. I had a couple of different mentors. At the beginning, I tried quite like a few different ones to see what is the difference and what would work for me. Because the first mentor, they looked at the charts and were very, very strict. And it didn't really work for me. And then I found the mentor, the person looked at the charts and everything was analyzed just visually, which really worked well for me because I don't work well with the numbers. I don't know what's the exchange rate of something or other. I don't care what it is. For me, it's what does it look like on the chart. And so I found a mentor that really worked well with the way that I learn best. And that really was what got me going and what actually made me the trader and be able to analyze the charts and then develop my own strategy afterwards, because I understood myself. I understood how I can learn and improve on what I've been taught. So having a good mentor that works in the same way that you like to learn is really important. And then I also had a mentor just for risk management, because risk management is, apart from mindset, really risk management is key. Otherwise, you can't make money. You can't run a business that is not profitable. So risk management it's basically its own, thing that you need to conquer and learn how to do. So yeah, having a risk manager that I guess understands how risk works, not just per trade, because I did have a risk per trade. But if you don't have a limit on that, you can blow your account the same as if you didn't have a risk management strategy or plan at all. So then looking at your overall risk and breaking that down into, monthly or even weekly, or if you're really, trading on the fast time frames, like 5-minute, 15-minute charts, you need to manage your risk daily. It's not good enough to manage it on a monthly basis, because you can, within the first 3 days of the month, blow your your account pretty much, and then you have nothing. Or you can so within the first few days you can reach your risk limit, and therefore you're not trading for the rest of the month and you're missing out on all the opportunities. So managing the risk in some kind of sections like weekly or daily allows you to have the longevity of the trading with still managing your risk within the parameters that you have.
Again, look, I completely agree with that. I think what's really interesting about the risk conversation is the amount of risk that people trade, the people are willing to tolerate changes as well too over time. So that's even with the same methodology. I think people, there's the old saying that there are bold traders and there are old traders, but there aren't too many old bold traders, right? And I think within that, that's actually a little bit of a lesson in that cliche, right? Which is to say, look, when you get settled into this and you get confident, then the money will arrive, right? All you've got to do is to just try and extract it from the market when you have the best opportunity. There's no need to push. There's no need to get aggressive. Providing your strategy is sound and it still operates in the market, and you haven't done something weird that is like a temporary short-term strategy, then I think that the outcome is going to be relatively straightforward. It's just a question of the individual and the speed at which they're going to try and get there, right? And I really like the idea of thinking about your risk as a daily exercise. I can't conceive a day when I'm running positions that I don't look at the P&L. It's actually one of the things that I tried really, really hard to do when I was a professional trader, to not do that. I was measured over a period of months and quarters. And so, you know, for me, 1 week doesn't really change anything. But equally so, it's really hard when you've lost, say you lose 5% in the account, you need to almost make 6% to get that back. And so this is the same old thing, right? If you can limit the losses to very small amounts, and then when the good times arrive, you're able to push the button and make that money, then it really does change the risk dynamics of the performance that you have. And again, understanding that is really important. So when you're thinking about a mentor, I really liked what you said around trying to find somebody that actually suits you. And I think that's like a coach. Is that like a coach in any sport? You know, I've always felt that traders are similar to sportsmen in the way that they approach things. And it must be the same, right? You know, there's and I think I recommend this to everybody. You know, if you're not happy with a coach, then just say to them, you know, well, look, I'm not really happy. We're not gelling. Let's try and move on to something. Like, you know, do you mind if I try somebody a little bit different who's got more of X, Y, Z? Or do you know anybody that does it this way? Because I think that suits me better, right? And I don't think it's unfair to ask those questions either. You know, there's no such thing as pardon me, as a really as an okay mentor. You either want a good one or you don't, or you want to move on, right? And you know, part of that is actually the relationship that you have and how they get on with you.
Yeah,
And I
I
think
think that's
that's
so true.
really important, right?
Yeah.
Um,
It's
and,
sort
and
of
I,
like my kids at school too. You know, if they have a really good teacher that's
yep.
encouraging, that makes a huge difference to their results and their the way they love that subject or not, as opposed to, you know, then they change years, they get a new teacher and they might not be doing as well because, you know, the teacher doesn't have the same approach or doesn't have the same style of teaching. So yeah, the coaching is definitely like that. You need to have that sort of relationship with the coach where their approach and their style works with yours.
Yeah, look, absolutely, and I absolutely certain as well too that all of us remember one teacher from school, and I bet you that's the teacher that we liked the best and that we did the best with, right? And so just looking at some of the questions, the comments that are coming down here. So okay, so when we talk about mental energy, I know that you've got some pretty firm views on this. You know, what do you think about managing your mental energy?
Well, I think it's critical for a trader. They really need to be able to manage their mental state, whether it's the highs or the lows, you know, whether you're making profit or losses, your mental health needs to be managed at both ends and all the way in the middle.
Hmm.
So yeah, I do personally, I do a lot of um, exercises in terms of mental health with different types of breath work and breathing techniques. I always go for walks, just go out into nature, take my dog for a walk. Like, for example, on Wednesday, I do 2 live shows. And, you know, trading live, it's like another level, right? So afterwards, I need just to unplug.
Hmm.
And usually I also turn the screen off because I'm not good to have the screen on all the time because when there's something happening, I'm like, oh, you know, having a look. Whereas if I turn the screen off for the 4-hour bar and then come back, that's a lot better for my mental health. And I don't see the spikes that, you know, something happens and the news bounces the candles around. So yeah, looking after our mental health is really, really important as traders.
Yeah, and look, we've mentioned this 2 or 3 times on this show before as well too. I'm 100% with you. I'm a huge fan of being able to be in the moment, and I know that sounds a little bit ephemeral to people, and you can't sort of try and put your finger on what that means. But for me, it's about just being in the right frame of mind. If I had the ability to be in the zone constantly, then I think that would be awesome. And I think you try and do your best to try and get there as often as you can. I like I've I've tried many different methods. I totally get the walk on the beach, by the way, and also I use Headspace as well too, which is awesome, just to get some quiet time, right? These days our lives are so busy, and it's really hard because we're so well connected. It's almost impossible to go anywhere without our telephones, right? And so actually just spending some time away from that, I think, is incredibly important. So when you're talking to a new trader, and you mentioned this earlier about the back testing and going back at those old trades and trying to figure out what happened, what went right, what went wrong, type of thing. Do you think that going forward, so moving, if we're thinking about now going forward and we are putting trades on, that journaling is important to this process?
Journaling. What do you mean going forward?
So writing down. I apologize if I've been confusing. So writing down what you're doing, what you're trying to achieve out of it, and what I mean by that. So let's say we sit down at work on a Monday morning. Right. Often we sit down at work and we have a list either of things to do that we've got from last week. Hopefully it's not that long, but you've also got a list of things you're going to try and achieve this week as well too, right? Either meetings or, projects or whatever they happen to be. So I think with my trading, what I try and do is I always sit down on a Sunday night and I go through the charts and I'm looking through them just to make sure I remind myself what happened last week. And then in my head, I have an idea about what I want to try and do this week. So when those ideas pop up, it gives me confirmation that that I'm thinking along the right lines, right? So let's say I want to be long of dollar Swiss or whatever it happens to be, right? Actually, I would like to be long of dollar Swiss. So that way, when I get that signal, I know that I don't have to think too hard about it because I've already done that piece of analysis. And I've got my notes about it, and I make sure that I'm following through when I get the trade. The last thing I want to do is to say, look, I'm really warm to dollar Swiss right now. I think it's going higher, and then miss the trade.
Right? Yeah, definitely. I think that's a good idea. And I always, because as a visual trader, I don't have like a logbook where I write, but it's all on my screen. So I document what I want and what I'm looking for. Any sort of those type of things that you're talking about, it's all on my screen. So every time I go back to my screen, I can refresh my memory. Oh yeah, this currency pair, this is what I'm looking for. And, I've got that right in front of me. Visually, I can see. Also having goals. So, and also revisiting the risk. So going, okay, we're starting, say, a new week. The goal is this, the risk is this, we've used up X amount of risk, therefore we're at this position, knowing exactly where we are. And I usually look at all the previous week's trades and I'll write my what I call like lessons learned. So most of the time it's going to be, follow the trading plan, it works. That's my reminder. Follow the trading plan, it works, right? And if I, take a discretionary trade or whatever it is, then I go, okay, what's the lesson learned? Sometimes it could be wait for the candle to finish before starting that trade, right? Because the plan says when the candle closes, then do this. And sometimes it's so tempting to go, geez, that looks so good. I want to, jump in. So the lesson learned might be wait for the candle to close, or whatever it is that happened the previous week. Sometimes there might be nothing. Sometimes it can just be, follow the trading plan, it works. And then other times it might be different notes, whatever I've made about the previous trades. Yeah. So that's definitely important too.
Hey, that's really important advice for any of those traders out there as well too. Hey, Lenka, look, I know I've just looked at the time and I unbelievably, we're running out of time once again. Look, if you can hang around, please. As always,
Yes,
we're going to
sure.
do some rapid fire questions at the end.
Okay.
You've been amazing. And look, I think before we get on to that, can we do one of my favorite bits of the show? Would you mind spinning our wheel of fortune once again to see who's going to get a couple of weeks with the broadcast group? Dominic. So Dominic, you have, I'm just going to pull up the chat. You got 30 seconds or 5 seconds or 10 seconds. Please respond. Let's go with that. Paul always gives you not enough time. Yes, thank you. Yes, you have won, and you'll get a couple of weeks of my broadcast group, and hopefully that'll help you along your trading journey as well too. Dominic seems quite happy to win that, and that's it's awesome, man. And look, Lenka, okay, are we ready? Thank you, Mai. As always, I love the Wheel of Fortune. It's awesome. It's one of my. I can't say it's my favorite bit of the show because that sounds awful, but it's one of my most exciting parts of the show. So, hey, are you ready for the rapid fire questions?
Sure.
Okay, so what trader has most influenced your trading?
Ooh, what trader? Oh, can I say my mentor? I don't know.
That's good.
Yeah,
Good enough.
my mentor. Yeah.
That's cool. What is one attribute you think a trader should have?
Ooh. Discipline. Discipline to follow the plan.
Absolutely. What's your favorite indicator in trading?
EMAs.
Joe Biden, savior or caretaker?
Who's that?
Okay, no, I know you don't mean that.
I have no idea. I don't do news. Remember that. I live under a rock.
This is somebody, by the way, folks, who you can tell right from the get-go is a pure technician. Okay, crystal ball time. What price level for Bitcoin in a year's time?
$63,575.
Okay, I'm going to write that down because that's a very specific number. So in order to win the competition, I have to make sure that mine's higher than that, right? So when the time comes. Okay, in a speed eating food contest, what food would you choose?
Speed eating contest. Oh, wow. Broccoli with oyster sauce and salt and pepper.
I absolutely love that. In my mind, I have you with a plate about the same size as a small mountain with broccoli and oyster sauce on it, going, yes, you've got a minute, get going. That's brilliant. Hey, Lenka, thank you. Thank you for the great conversation. It's been brilliant to chat to you. And look, folks, if you're listening into this, we really want you guys to, if you have any questions and you're listening to this real time, then post them in the chat. We're always happy to try and reflect that through. And, when we talk to the coaches, there's so much information that's being given out in these sessions. I suggest that if you want to, you go back and look at it again to try and get some of the key features out of this. But Lenka, thank you very much for your time. It's been awesome. And to everybody out there, as always, if you have been, thank you very much for listening. And
thank you for having me.
It's great. So over to Paul and the TTR show in a few minutes. Okay, cheers, folks.
Thank you. Bye, everyone.